All right, guys. So today we took one trade and I hit for a break even. So let me go over the trade and then let me tell you guys what I was thinking whenever I entered this trade. Today I was a lot more bearish than bullish, if I'm being truly honest. I just had certain, indicators telling me like, hey, of course not like on the chart, but like certain indicators just telling me like, hey, today we're gonna look a little bit more bearish than bullish if we fail to do X, Y, and Z. If we fail to break, so if we fail to break, so let's go over the trade. Let's do a top down. Let's start from the lower time frame, then work our way up. So here's the 1 minute. I did not enter off of the 1 minute, but you can see we had a compression or a consolidation. Market pushes down, sweeps pre-market lows. We push up higher. We don't really, form a change in the state of delivery above this high, and then if we push down lower, we have an inversion form, and I did not take this short. Reason why was because, again, if you're wanting to be bearish and you want to see the market push down lower, you want to see us sweep this high first. That's kind of like the main theory here is like, hey, if we're going to push down lower, you would want to see the market push up higher, disrespect this, form another inversion or a form of change in state, and then eventually start pushing down lower. So usually whenever you want to see shorts, you want to see a sweep a high, and then vice versa. Whenever you're bullish, you would want to see a sweep a low. So when I saw the market push down lower, swept this low, I initially thought, okay, today we're probably going to be a little bit more bullish, probably going to start, respecting the 4 hour fair value gap. And then we pushed up, failed to make the change in the state of delivery, close above, formed the breaker, all the good stuff. And then I was like a little bit more mixed bias once we started to push down lower. And then once I saw this final push up, and then we eventually broke above this high right here, I entered. Off of a 2 minute change in the state of delivery here, and that was initially my entry. So we had a 2 minute change in the state of delivery. I entered, and then eventually once the market pushed up, came back down, I got stopped out. And the reason why I went break even really, really soon was because, again, if we had this right here, the our break even point was met, of course. Once I went break even around here, I wanted to see the market push up higher, reach this high, and then eventually I'll be calm with, hit and break even. But I thought about it. I was like, all right, so we have so many relative equal highs up here, all this low resistance being built up. And if the market is going to be bullish, probably going to melt right through that. And we're going to, probably close above the 30-minute CISD and then, retrace back into like consequent encroachment of it and then reach the session highs or previous London highs, I believe. Or no, yeah, just let's say pre-market highs. So would reach pre-market highs, and then we failed. We failed. I hit break even. Market chopped around. I was like, okay, maybe I made the wrong decision of going break even. I was like, maybe the indicators were wrong. Maybe we're not going to be as bearish as I thought. Maybe today's going to be more of a compression day if we don't, start breaking above here. And then, maybe my bias was right. Maybe my initial discretion was correct of going break even. And the next, the market pushes up, fails to break above this high, and then we start slowly melting lower. And then we have another sweep of all this relative equal sell side. Once we start sweeping all the sell side, I look at my phone. I'm like, okay, maybe this could be the final push where the market eventually starts to have that initial push. We do changing the state. I don't enter again. My one trade a day done for. The market comes back down, sweeps one more time, and I'm like, oh my gosh, I'm so thankful for just getting out of this trade, and then eventually just looking at all of this from 9:30 all the way till 10. I'm just glad. I'm like, oh my gosh, I avoided so much chop, so much headache, and then eventually the market sweeps one more time, and then we push up. We have that final push, again around the silver bullet, and that 1050 to 1110 macro lets us reach the objective of breaking past this high, that intermediate term high inside the sell side objective from 931, and then eventually we start to melt after that. So initially my bias was bullish because, again, we have a higher time frame PDRA. So again, this is where we start going from the top down, avoiding the entry, avoiding the context from what we saw on the lower time frame. On the 15-minute time frame, we don't really have much. And then if we go up to the 30-minute, you have a 30-minute sell side imbalance. And this is very crucial to me because, again, the sell side imbalance was like in between equilibrium of this range, and I wanted to see it get disrespected, if I'm being truly honest, because we're trading inside of a discount of the range. So if I go from here to there, I didn't mean to do that. Suppose we start from here to here. I wanted to see equilibrium of this get disrespected. Like the high, maybe we come back down to discount, then I get stopped out. But no, I wanted to see it get melted through. Then we push up, and we push up, and then we reach the buy side objective. But that never happens. And eventually we start melting lower after respecting the the 30-minute. And then we also form a 1 hour CB, which is eventually a lot more crucial in the market, a lot more sensitive, if I'm being truly honest, to then push us down lower. And if we go down to like the 4 hour, on the 4 hour time frame, we have a 4 hour buy side imbalance, sell side inefficiency, and then we have a daily buy side imbalance that is unfilled. So right now, the market's objective is to reach that daily PDRA. We were unable to continue above previous day's high, as you can see, showing strong rejection, the 1 hour also. And then this 4 hour PDRA, which is not being supported by anything right now, aside from, being a key draw to melt through and then reach the daily buy side imbalance because it's unfilled. So the market is clearly targeting the daily PDRA and is trying to reach back into discount of the range, if not equilibrium. So that is really the initial objective. And then on the 1 hour, you can see we hit that 1 hour sell side imbalance. We also formed a 15-minute buy side imbalance. And then once the 15-minute buy side imbalance was disrespected, as you can see here, let's go to like the lower time. Let's go to like the 1 minute. Once the market reaches back up into that buy side imbalance, you can see it just melts right through it, pushes up once more through it. Again, if we were going to be bullish, especially since we have another one below it, you would ideally want to see an inversion fair value gap form, break above all these highs, and continue higher, but that never happens. We actually continue lower, start to retrace, respect it once more, and then continue to the downside. This would have probably initially been your best setup, which is a 3-minute inversion right here. To then continue to the downside, and you also have a change in the state of delivery after retracing back up into your higher time frame inversion fair value gap after respecting the 1 hour sell side imbalance, unable to sweep these relative equal highs and of course the range highs, and you are sweeping all this pre-market, or not pre-market, but opening your opening range highs, and then you just continue to the downside right around here. Again, standard deviation targets. Initially, that's kind of like what you would ideally want to target, and that is really like your 1 to 2, and that's it. Bread and butter, you can go break even. After initially, like, you break past this high, right? I mean this low. If you break past this low, you could go break even. You might get stopped out, if I'm being truly honest. If you go break even past this low, I don't know actually, because again, the spread usually gets you out, if I'm being truly honest. So it just depends on where you have your break even point. So yeah, I like going break even pretty soon. I won't lie, saves you a headache majority of the time, especially on days like this. But on a trend following day, it's just sweet, clean. You reach your objective once you start melting. But even on a trade like this, you ideally would want to go break even since you're chopping and you don't know if you're going to reach your objective of breaking past this low and continuing, probably trying to reach this one. You don't know if the market's going to just continue higher since you're, reaching and respecting a 4 hour PD rate during that time. But then you continue down lower and you start melting, and, it would have paid off either way. So that's pretty much really it for today, honestly. I did not regret, going break even. I did not even hate the trade idea that I took, honestly. I feel like it was kind of early into market open. It was around 9:48. That's kind of when I took my trade, around 9:48. So I did not hate it, but I don't like it, honestly, because again, my confluences were telling me like today's probably going to be a little bit more of a bearish day. I was still looking for longs. I was still ideally bullish. So I just need to start reviewing and reflecting and thinking to myself like, okay, what is the most ideal, optimal scenario for each confluence to stack and build each other up to then eventually give us those high probability setups. So I need to review, do a little bit more research, and then continue. So, and then again, another thing I've been doing a lot more recently is like hiding all my account balances, my previous day, my personal daily loss limit, my unrealized P&L, my realized P&L. I changed the colors of it, and I just changed it to black, both of them, because again, I don't want to be looking at my P&L. I really don't even want to be focusing on like the P&L, the account stats. I just want to be trading and focus on the trades and the system, and that's it. I don't want to be you know, thinking to myself like, oh my gosh, how much am I away? Or, oh, how much do I have to do? Like, that's improper risk management. I think you should have proper risk management whenever you're approaching fundeds, and even just on a live account. I think risk management should be one of the first things you do. And that's just something I was neglecting for so long. You know, like I wasn't actually having proper risk management. I would just put on the brackets and then, you know, use this right here like that. Like the measuring tool, like, okay, 33 points. I'll probably risk around like 8 contracts, boom, sell, and then boom. You know, instead of just going through like a website, and then, you know, calculating my stop loss, my account size, the contracts, X, Y, Z, and then just boom. So yeah, today I was risking around 2%, and I was risking around 8 contracts. So yeah, that's pretty much really it. Here is the execution, or 10 contracts. My bad. So I was risking around 10 contracts with a 50-point stop. So yeah, stop loss was at the rejection block lows, a little bit below that, honestly, and yeah, don't regret it, don't hate it. And that's another thing too. Like, I'm just trying to pass these accounts a lot more. I'm actually allowing myself to have more bankroll to either fail and blow or pass and then just aim for a huge payout. I'm not really trying to. The main objective right now is to build the bankroll. So starting off with not as much, ideally. So that's why I'm not copy trading so many accounts. I'll probably just buy 1 or 2 accounts, copy trade, like max 2 accounts, two to three accounts, and aim to pass the evaluations, lower the risk while we're on the funded, be more picky with my setups, risk around like 1.5%, and then eventually aim for the max payout in like 5 trading days of just straight A+ setups. And that's really it. That's ideally really it. Just based off of the Monte Carlo, based off the statistics, again, it's most ideal. Just like extending your time horizon, but also lowering your risk, because again, it just provides a lot more certainty of you actually reaching that payout if you have a system and you have alpha in your system and consistency. So that's pretty much really it. And that's another thing I'm trying to do, is just build alpha. So I will catch you guys tomorrow. Peace.